Welcome back to Explain the Charts, your ultimate guide for actionable market insights. In today's session, we're putting the spotlight on Meta Platforms, ticker Meta, a stock that has been a powerhouse in the tech sector and a consistent topic of discussion among investors. Let's begin by grounding our analysis in the latest fundamental developments. Recent Google search results show Meta currently trading around $770.11, demonstrating a slight positive intraday movement, sitting near its 52-week high. The sheer scale of the company is evident in its $1.935 trillion market capitalization, underscoring its significant influence in the digital economy. A pivotal recent announcement is Meta securing a massive $29 billion in financing from financial giants PIMCO and Blue Owl, earmarking it for a significant data center expansion. This substantial investment not only signals Meta's aggressive growth strategy, but also its commitment to bolster the infrastructure vital for its rapidly advancing AI initiatives, setting the stage for future revenue streams. Analysts maintain a highly optimistic outlook, projecting an average one-year price target of $861.06, with some estimates reaching an impressive $1,086, suggesting considerable room for appreciation in the coming year. Historically, Meta has been an exceptional performer, boasting a 31.75% year-to-date return and a remarkable 49.24% over the past year, significantly outpacing the broader S&P 500 index. Much of this stellar performance is directly linked to recent reports highlighting Meta's AI-driven engagement gains and substantial ad conversion boosts across its platforms, reinforcing its technological lead. However, it's crucial to acknowledge the regulatory shadows. Meta is currently navigating potential antitrust charges in the EU and has, in response, delayed its AI chatbot launch in Europe, presenting a notable, albeit manageable, risk factor. Now, let's switch to the daily chart and interpret the broader price action over the past year and a half. The visual trend is undeniably bullish, characterized by a clear sequence of higher highs and higher lows, reflecting strong investor confidence and consistent demand since early 2024. Examining historical price levels, we can identify a very strong long-term support zone around the $440 to $450 mark. This level was vigorously defended after a notable price capitulation in late April 2024, which appears to have been an exaggerated reaction to an earnings report, quickly followed by a powerful recovery candle on high volume. This area now stands as a critical confluence of support, indicating where substantial buying interest emerged previously and potentially again if a deeper correction were to occur. As Meta ascended, prior resistance levels were systematically turned into new support, illustrating classic bullish market behavior and confirming the strength of the trend. The recent ascent has brought the stock close to its 52-week high of $784.75, established on July 31, 2025. This peak now acts as a formidable short-term resistance barrier, a level where previous bullish momentum stalled. Overcoming this level decisively, accompanied by robust and sustained volume, would be a strong indication of continued upward momentum towards higher price targets. Conversely, a failure to break past this resistance could invite a period of consolidation or a minor pullback, as some investors might choose to realize profits after the significant run-up. Shifting our focus to the one-hour chart, let's zoom in specifically on the period between July 29th and July 31st, 2025, to pinpoint the origins and characteristics of the recent explosive move. Before this surge, Meta was largely confined within a tight trading range, hinting at a period of accumulation or indecision. However, a dramatic shift occurred on July 30th, marked by an exceptionally large green candle that decisively broke above the prior consolidation resistance, signifying a powerful bullish breakout. This aggressive upward movement was likely ignited by the very positive news flow surrounding AI advancements and early indications of the significant data center financing deal, highlighting the market's immediate reaction to fundamental catalysts. The follow-through during trading on July 31st was equally compelling, as the stock maintained its upward trajectory with strong momentum, quickly propelling it to new all-time highs and setting the 52-week high. For aggressive traders, identifying such high-volume breakout candles is crucial, as they often signal the beginning of a significant trend, presenting prime entry points with tight stop losses below the breakout level. Expanding our view on the 1-hour chart to include the period from late July 31st through early August 8th, we observe a post-breakout consolidation phase. After the initial vertical ascent, the price action has settled into a somewhat sideways channel, largely holding above the $750 level. This $750 price point, which previously served as a notable resistance during earlier rallies, has now flipped to act as a crucial immediate support, a very positive sign for bulls. This resistance-turn-support phenomenon is a classic technical pattern, often reinforcing the strength of the preceding bullish move and indicating a new, higher floor for the stock. Trading volume has normalized after the peak of the rally, indicating that while the fervent buying subsided, there isn't significant profit-taking or bearish pressure pushing the price down, which is a healthy sign. This current sideways movement, holding above a key level, could be indicative of the stock gathering strength for its next leg up, rather than signaling an immediate reversal. To gain an even finer perspective, let's examine the 15-minute chart, specifically focusing on the trading activity from August 6th to August 8th, which represents the very latest granular data we have. Within this condensed time frame, we can see the price oscillating tightly around the current $770 mark, as indicated by the most recent market data, showing a short-term equilibrium. Intraday clear, albeit temporary, support levels have emerged around $760 to $765, where buying interest typically steps in to absorb selling pressure and prevent deeper pullbacks. Conversely, the $770 to $773 range has consistently acted as a ceiling, with price struggling to break convincingly above it during these trading sessions. Volume analysis on this time frame can reveal crucial short-term momentum shifts. Noticeable volume spikes often accompany attempts to break these intraday boundaries, either to the upside or downside. For active day traders, recognizing these tight ranges and observing how volume interacts with these mini support/resistance levels is paramount for identifying quick scalp opportunities or anticipating the next decisive intraday move. Now, let's bring it all together on the daily chart and discuss the strategic implications for trading Meta, considering both short-term tactics and long-term investment horizons. The overarching bullish trend in Meta platforms is firmly established, significantly driven by its leadership in AI and substantial investments in data center infrastructure, validating its growth narrative. Key support levels to meticulously monitor include the immediate $750 zone, a former resistance turned formidable support, and more robust long-term anchors at approximately $650 and the crucial $440 to $450 level, where strong multi-day reversals have previously occurred, acting as historical demand zones. The primary resistance currently is the 52-week high near $784.75, which stands as the next major hurdle for the bulls to clear. For a compelling bullish thesis, Meta's unwavering commitment to AI innovation, coupled with the massive $29 billion data center expansion, positions it for sustained long-term revenue and earnings growth. A decisive and sustained break above the $785 resistance, ideally accompanied by robust and above-average trading volume, would serve as a powerful continuation signal, confirming the next leg up. In such a scenario, reaching the average analyst target of $861.06 becomes highly probable, perhaps with a 70 to 75% likelihood, especially if the positive sentiment surrounding AI technology persists and no major regulatory setbacks emerge globally. This breakout could present a strong long opportunity for both swing and long-term investors. Conversely, A bearish outlook could manifest if the ongoing EU regulatory scrutiny escalates, leading to fines or operational restrictions, or if there's a broader market correction impacting the entire tech sector. A confirmed breakdown below the immediate $750 support, signaled by increased selling volume and successive lower closes on the daily chart, could trigger a short-term pullback towards the $700 or even $650 levels. We assign this a moderate likelihood of 35 to 40% in the near term, particularly sensitive to adverse news or a shift in overall market risk appetite. If $650 fails as support, the long-term $440 to $450 support becomes the next critical reevaluation point for a potential deeper correction. When deciding your entry and exit points, always look for volume confirmation accompanying price moves, classical candlestick patterns like engulfing bars or hammers forming near established support/resistance, and the relative strength or weakness of the broader market and sector. Stay vigilant for Meta's upcoming earnings reports and any further developments regarding their global regulatory challenges, as these events will act as significant catalysts, dictating the next major price swings and offering potential trading opportunities. Remember to align your trades with your individual risk tolerance and investment time horizon.